Joining me now here on the floor of the New York Stock Exchange, though, is Jenna Stauffer, who's the broker and global real estate advisor for Sotheby's International Realty. Thank you so much. Happy holidays.
Happy holidays.
And you're dressed for the occasion for New Year's Eve. I love it. I love it. Look, you're here to talk about the housing outlook. Obviously, at this time of the year, we're looking ahead to 2026. You and I only spoke a few weeks ago, in fact. And, obviously the housing market hasn't sort of picked up at the pace that many had anticipated, particularly with 3 rate cuts in the system already. Where are things at now?
It's been a frustrating housing market for sure. Okay. There's a lot of buyers that just feel like they've been completely priced out of the housing market. You have sellers that feel like they're just stuck in place. You have Gen Z that feels like they're never going to own a house. Affordability is going to be the defining factor in 2026. I would say that there's some glimmers of hope, though. I do expect affordability to ease slightly. And my big idea with 2026, what I believe will happen, wages and prices. You'll really see strong wage growth, and these wages will outpace price growth. And this is how the affordability gap really starts to close. So we just got the latest Case-Shiller read. Mm-hmm. So Case-Shiller showed 1.4% price appreciation, and it lags a bit. So this was for October, but when you take it back to January and where we were at 4.1%.
Right.
So there's really been deceleration. The market's so bifurcated. I know that here in the Northeast, prices are definitely higher. You have less inventory, so there's more pressure on prices. In the Sun Belt states, I'm based in Florida, you're definitely seeing that deceleration happening. But overall, you're not seeing that rapid, that unsustainable pace of appreciation. So 2026 should really bring us some much needed pressure relief.
Interesting. I mean, what are we talking? Q1, Q2? I mean, what's going to change between now and then to actually see a meaningful change? Because, as you say, little green shoots here and there, positive, encouraging sort of baby steps, as you say. We're taking a look at that data yesterday, and yeah, you're right, we are seeing a deceleration, but then it's also like pockets of the country. I mean, this is such a big country as well. I mean, so you have such diverging sort of trends happening in different places. But yes, what is going to change between now and whenever that's going to happen?
There's not one single factor that will change things. It's going to take time. It took us a very long time to get to this point, right? Affordability is such a mess because of numerous things that have happened over the years. We've had massive underbuilding, we had massive government spending, we had ultra low mortgage rates, we had parabolic price growth. Just a number of factors got us here. So this isn't an overnight fix. It's going to take time. But when you really see prices, you see incomes, you see rates really align, that's when you start to see affordability start to ease. So it's a reset in 2026. Real estate's very cyclical, and this is a tough housing market, and it's going to take us time to get out of it. But if we can see improvement, specifically with wages, prices, mortgage rates too, they're around the 6% level, lower 6% level. We started this year around 7%. We hit 8% in 2023. So this is an improvement. This does give buyers some purchasing power, specifically those on the margin buyers in 2026.
Not to mention, we just had a very sort of sobering conversation with our previous guest, which was talking about the fact that, obviously the job market is changing because of what artificial intelligence is now doing. So obviously people are worried about that. So you've got the affordability, you've got the rates. I'm just wondering, looking at the housing market in 2026, obviously there's been a big conversation around the home builders as well, the incentives that they've had to come out with to try to get people off the sidelines. Are you seeing anything as far as easing margin pressure for some of those companies, particularly that are dealing with, a market that just hasn't recovered at the pace that we had hoped?
There's going to still be a lot of initiatives, I believe, with builders in 2026.
Right.
Builders really overbuilt in 2025, and they didn't have the demand. We had this demand that was just going crazy, obviously, when mortgage rates were low, and that demand has just really slowed down. So builders have to get through their inventory, and in order to do that, they're going to have to incentivize people. Affordability is such an issue because it's not just also the purchase price, it's all these things that come with it too. It's the rising taxes, rising insurance, insurance, the rising maintenance costs. It's what I call this lethal combination of factors, and that's what's making it so challenging for people to get into the housing market. They're not incentivized either, because you have about 54% of mortgage holders, they're holding a mortgage rate under 4%, so no one wants to give that up.
I'm interested in some of your notes as well that you pointed out about how people are going sort of the non-traditional method or route around home buying and home ownership now. I mean, you say that the path looks very different now compared to how it has in the past, and you sort of the reasons why people go out and purchase homes. Can you sort of talk us through some of the trends you're seeing and why?
So the median age of the first-time buyer, it's jumped to 40 years of age.
Right, yeah.
So this is just a totally different environment. And you hear from Gen Z how frustrated they are. They've done everything right. They have an expensive education. They have a good job, yet they can't get ahead. They feel like they can't get into the housing market. So you're seeing Gen Z and just young people in general that, okay, if they want to get into the housing market, it's not the traditional way that we might have done it in the past. They might be purchasing investment homes or purchasing a home that has an accessory dwelling unit, a duplex, and this way they can rent out part of their home, and that helps to offset the costs of insurance, of taxes. They're having to just be creative, be flexible. They're purchasing properties with friends, anything they can to get into the housing market. There are a lot of people that still really believe in the dream of home ownership, and they understand the value of home ownership. They want to become homeowners. They want to build their own equity. So in order to do it, yeah, it's a challenging environment, but they're having to be creative.
It's interesting that you say that, because obviously Gen Zs and millennials, for that argument as well, have seen their parents do it a little bit easier than they were able to do. But the whole idea and the concept of home ownership, I mean, have you seen that being put on the back burner at all? I mean, as far as, look, I'll just rent forever if this is how it's going to be. Is that something you're hearing about?
Well, when something feels so out of reach, it becomes like a pipe dream, right? And you just want to give up on it. So you do see some people that have just given up on it, and they've said, okay, I am just going to be renters forever. And look, buying isn't for everyone. Not everyone. It doesn't always make financial sense to purchase a home. You really have to evaluate your personal situation. You have to understand your long-term goals. It might make more sense for you to park your money somewhere else and then later go after home ownership. So.
We talk about the buyer a lot. Obviously, you've run through some of the frustrations, particularly with the younger generation, those who are wanting to buy their first home. What about the sellers? Is it frustrating for them as well?
It is frustrating for sellers. So the market's so bifurcated, as we have just spoken about. In the Sunbelt states, you're seeing homes really sit on the market for a while. And it's a tough pill for sellers to swallow because we're not at the peak in a lot of markets. So prices have come down. They've had to recheck their expectations, and they saw their neighbor, they saw someone else getting a certain price a couple years ago. Well, they want to have that same price, or they believe that the price has to have gone up way more because it's been a couple years, and that's just not where the market is at. So it's frustrating for sellers. I would say that sellers are coming more to terms with the current state of the market.
Yeah, such interesting things to watch out for in 2026. We really appreciate it. We'll check in with you in the new year. Thank you so much for your time and joining us here on the floor, and Happy New Year to you.
Happy New Year, Sam.
Thank you so much. All right, that is Jenna Stauffer there, Sotheby's International.